Curious about the national residential real estate market? We'll discuss the 6 key national real estate market metrics and how each impacts buyers or sellers. Afterward, we'll provide specific information for those who are considering buying or selling a home. Hello Central Kentucky. This is the National Real Estate Market Watch for November 2023, brought to you by Century 21 Simpson Associates. Let's dive into the metrics and trends based on the latest national market data from September. Months supply of inventory. Months supply of inventory measures how long the current inventory of properties would last at the current rate of sales if no new properties came on the market. 6 months of inventory represents a balanced market, favoring neither buyer nor seller. September marks the 17th consecutive month of year-over-year increases in months supply of inventory. The month's supply of inventory rose to 3.4 months. That's a 3% increase over the previous month and 6.3% lower than a year ago. Buyers have less competition compared to the recent past. However, competition remains resilient. At 3.4 months supply of inventory, the market continues to favor sellers, which means there are not enough homes on the market to meet buyer demand. For context, over the past decade, the average month's supply of inventory was 3.9 months. Current inventory. Current inventory reflects the number of active listings as of the 15th of the month. The number of actives is not static and depends on when the report is run. A trend upward or downward from month to month can be established by using the same day of every month. In September, the inventory of unsold existing homes rose to 1.3 million. That's an increase of 18.2% compared to the previous month and down 8.1% compared to the previous year. Only buyers who are not impacted by rising mortgage rates are likely to appreciate having slightly more options to choose from. With the current low inventory, this metric favors sellers. Sellers can feel more confident and may be more likely to put their home on the market despite rising mortgage rates. Existing home sales volume. The existing home sales volume is the total number of all the properties whose sales contracts were completed or closed during the month. Home sales were down 2% compared to the previous month and 15.4% compared to the previous year. As has been the case throughout this year, limited inventory and low housing affordability continue to hamper home sales, said National Association of Realtors chief economist Lawrence Yun. Homes that sold in September typically went under contract in August. In August, rates began jumping above 7%. As expected, we're seeing a decline in sales as a result, albeit a contained 1–2%. Buyer affordability is again impacted by higher interest rates. However, those who are willing or need to purchase can take advantage of a slight increase in inventory compared to the previous month. Sellers who are ready to list their homes should be encouraged that despite sales being down, buyer demand continues to outpace supply. While there are consequences for both buyers and sellers, the existing home sales metric is simply a gauge of market activity during this period and favors neither buyers nor sellers. Median sales price. The median is the price where half of the homes sold in any given area that month were cheaper, and half were more expensive. The median sales price fell 2.4% to $394,300 compared to last month, yet it's up 2.8% over last year. Affordability has been dramatically impacted by the double hit of high prices and mortgage rates. It has challenged many buyers and would-be sellers that need to purchase again. There is still not enough inventory to meet demand, which means that prices will likely continue to rise year over year. For the third straight month, home prices are up from a year ago, confirming the pressing need for more housing supply, said National Association of Realtors chief economist Lawrence Yun, who has been vocal about inventory needing to double to temper home price growth. Buyers who are currently able to take advantage of the lower levels of competition can lock in today's home prices and refinance their rate later. Sellers still have an opportunity to capitalize on historically high prices and continued buyer demand. Sales prices are directly related to the continued levels of low inventory, so this metric favors sellers. Current mortgage rates. Interest rates vary by area, lender, and type of financing. For reference, we look at the national rate for a 30-year fixed-rate mortgage. As of October 19, 2023, interest rates stood at 7.63%. There's no two ways about it, rates are high. Rates have exceeded the historical average of 7.39% and are the highest they've been since 2000. While the current interest rates feel high to consumers compared to the 2.65% rates they enjoyed not even 3 years ago, they're just slightly above the all-time average of 7.39%. Interest rates are a big piece of the affordability equation for buyers. Each 1% increase in rates is roughly equivalent to paying a 10% higher price. Buyers may be more hesitant to overpay now that rates are up so much, even though inventory remains tight. A bright spot is that 29% of the buyers are paying cash right now, and mortgage rates don't impact them. Thanks to continued strong prices and multiple offers, the rising mortgage rates won't necessarily impact the sale of their home. Thus, this metric favors sellers. Days on market. The days on market is the average number of days that sold listings were on the market. Those days are calculated from the day a property is listed until it goes under contract. If there were any days the property was off the market, then those days are subtracted. Days on market are up by a day but are still moving at a quick 21 days. The average number of offers per listing was down notably to 2.6 in September from 3.2 in August. In September, the number of listings that sold above asking price fell to 26%. That's down from 31% in August and far below the peak of 51% in the summer of 2022. However, there's some traditional seasonality to account for here as well. In September 2022, 28% sold above list price, just 2 percentage points above this year's reading. While that might look like buyers are less competitive, it's possible that they're compensating for that with other contract terms. Buyers waiving inspections jumped to 27% from 23% the previous month, and those waiving appraisals were up to 24% compared to 22% the previous month. Affordability has the biggest impact on first-time home buyers. Their percentage of the market declined from 29% in September 2022 to 27% in September 2023. Buyers have a little more time to think and are less likely to be in a bidding war. Sellers, there are still buyers in the market who act fast, but are more likely to pay closer to list price than last year, so this metric continues to favor sellers. Now that we've covered the latest national housing market metrics, what do they mean for buyers and sellers? Let's consider what buyers and sellers need to know. First, let's discuss whether to buy or not to buy. Current headlines for buyers that now is the worst time to buy in history are missing some important context. Is now a tough time to buy? Absolutely. It's expensive, the lowest affordability measures on record, in fact. It's competitive. Maybe you should just rent? The data shows maybe not. While this graph illustrates that rental rates have grown at a slower and steadier rate and home prices have seen more variation, both have moved up over time. Put on your investor hat and consider the purchase of a property a long-term investment versus paying the mortgage down on someone else's investment. Buyers. Great news! The supply of available inventory remains steady from last month, meaning that buyers have a little less competition compared to previous months. Interest rates are also up. When interest rates jump, decisive buyers have a narrow window to capitalize on less competition while others may pause to consider. Prices are up slightly from last year. In fact, with low inventory and strong demand, it's likely they'll go higher. You have a unique opportunity to find a house and lock in today's prices. You can always refinance as rates settle back down. If you find the right house, wouldn't it be great to make the move while all these factors are in your favor? Sellers. Timing the market is nearly impossible. The best we can do is read and react to the data available. Despite high interest rates, there is still buyer demand. With tight inventory levels, days on market is just 21 days, which means well-priced listings in good condition are selling fast. What's more, waived inspections and appraisal contingencies are up, signaling buyers are finding creative ways to continue to be competitive. Have your realtor run the numbers based on the market and see if that achieves your financial goals. It's best to act now if you're ready to sell. If you are interested in comparing the metrics in this national market update with those in central Kentucky counties, check out our local real estate market updates for Frankfort, Franklin County, Georgetown, Scott County, Lawrenceburg, Anderson County, Lexington, Fayette County, Nicholasville, Jessamine County, and Versailles, Woodford County. Have questions? Call our Frankfort or Lexington offices or reach out to one of our real estate agents. Please join us again next month. Thanks for watching.